Welcome to the monthly video update. This is being prepared for March 2022, where what I'll do is I'll go back and look at things for the month of February 2022, and then see how things look for the entire month of March. Now, this is the first time I've done a monthly video in quite a while, and I've revamped how I've done these. Some of the slides might be a little out of order. For those of you that watch the daily and even the weekly videos, it might be a little bit different. So if you have any feedback, please let me know, either positive or negative, especially negative. So I know what to change. I know more of what you might be interested in hearing in these videos, but this is the goal of this is just to take a really big picture look at things. So we're going to cover the entire month of February for how it looks for March. So to kind of recap what happened in February, we were down for the month, and man, it was a real roller coaster, and we have lots of different things going on right now that are really tugging on the market. And we have a couple of really good up days, and then we have some down days. Well, overall, we really didn't go anywhere, but on a month beginning from the end of January, the last trading day in January until the last trading day in February, we ended up being down 3.14%, or pi, for those of you that are kind of in the math. Volume for the month was above average. And what we're looking at here is that there are negative technicals on the daily and some of the weekly charts, but on a monthly basis, yes, things do show some weakness, but we're still positive overall when we look at the bigger picture. As I record this, we're in the middle of earnings season. We've seen inflation really grow, and it's up over 7.5% now based on how it's calculated. If you look at it in different ways, we could be anywhere from 14 to 16 to 17% inflation. Interest rates continue to gyrate all over. And as I record this, we're in the middle of the Russia-Ukraine situation, and that is really gyrating the markets right now. And some days when it looks like things are a little more understood and positive, the markets go up. Other days when there's uncertainty and things could potentially escalate, the market goes down. And then we're also looking at a trend strengthening right now that on a daily and weekly basis is negative, but it's still hanging in there somewhat positive on a monthly basis, but it could be starting to look worse. As far as sentiment, this is a monthly chart of the VIX. So this whole bar right here is 1 month, and we ended right in about the middle from the last day of February based on the last day of January. And here is the bar chart up above, right up here, just to show you that we did decline for the month. And then one thing that comes out every week that I like to look at, but I'm also going to include it because this can have a longer term ramification, is the American Association of Individual Investors. And they are strongly pessimistic right now. And we've seen that for the last few weeks, and it'll probably continue to be negative as prices go down to sideways. But this a lot of times has marked some kind of a bottom in the market when we show an extreme negative reading. Then another chart that this is a little bit outdated, but I'll try to update this as we can. This is, and I show this sometimes on the weekly video as well, where up at the top, this is consumer sentiment. On the bottom, this is the 2-year yield, or the interest rate for the on the 2-year. And what we're seeing right now is where people are not very happy about things. Consumer sentiment is going down where interest rates are going up. Well, a lot of times what happens is these tend to go up with each other. And I have a different chart that kind of shows that relationship a little bit better. But what has happened in the past, When we have topped out in the 2-year rate, that has a lot of times marked the top for the market. This is back in 2000 with the dot-com bust. This is the financial meltdown, 2008 or so. This is how things looked before the whole COVID plunge. Well, we don't really know if this is really the top right now because interest rates have right now been declining, but we want to keep a close eye on this. If this looks to be rolling over and we're at some kind of an extreme positive reading with sentiment, a lot of times that will mark the top in the market. Right now, they're going in opposite directions from each other. So as far as the breadth for the month, since we had a negative month, we saw a decline based on price and based on volume, but we're still above the moving average longer term, and we're right at to slightly below the moving average based on volume. Then looking at the monthly advanced decline ratio, it's been going down recently as the market has been going up. That is a bit of a negative divergence that we see here. In a good, strong, healthy environment, you want to see prices increase and the advanced decline ratio increasing as well. Then looking at the new highs and new lows, we had a lot of new highs that were generated, but a lot of new lows as well. And we take a differential between the two, and it shows that currently we're seeing a decline as new lows overtake new highs. Then looking at the the accumulation distribution. Yeah, it is rolling over and we're below this moving average, but look at this in the bigger picture. This goes all the way back to 1980. So even though we're starting to see some price weakness, even on a monthly basis, this hasn't really rolled over yet when we look in, especially when we compare this to the moving average. We are below it and things might continue to decline, but it's still hanging in there for right now. Now, one thing I need to tell you about is that this chart up above is the S&P 500. This accumulation distribution, or the advanced decline that I'm measuring here, this is based on the NYSE, because the advanced decline information that I get on the S&P 500 doesn't go back very far. I want to take a real big look at this, and so that's why I'm using the NYSE instead of the S&P 500 information. As far as our trend, we are starting to weaken as a trend, and you can see the green line is coming down. So that shows that buying power is trailing off and we're turning more negative, and we're seeing a slight increase in selling pressure. And since we are turned down, we haven't quite crossed over this moving average yet. And this is a 5-period moving average. That's when we'll show more of a weakening trend. But we're coming off of what had been a really strong positive trend. So this is turning more negative, but it hasn't really switched to flat out negative yet. Then another indicator that we look at is a thing called the mass index. When this crosses above 27, which is this blue line, and then eventually comes down below and hits the 26.5 line, that is a signal that something is going to happen. Well, we've had that signal crossed right at the beginning of 2021, and prices ended up going higher. We do not have a signal right now. We need to wait until this goes back above 27 and then eventually drops below 26.5 for there to be a signal generated. And then we try to use other tools to determine, are we going to go up or are we going to go down from here? Then another indicator is called the Arun, and this is a monthly chart of the S&P, where the green line at the top, that is buying power. And when this is pegged all the way at the top, that means that buyers are in control. The red line, when it goes all the way to the top, like it did back here in 2008 and the whole financial meltdown, that means that sellers are in control. And what we're seeing right now is that, yes, buying is trailing off, but selling has also been decreasing for the last few years. So even though things are negative, Right now, in the bigger picture, they still remain positive. And then down below, we have the oscillator, which is the difference between the two. It's above zero, and even though it's going sideways, we can still default that to being a little bit more positive right now, even though this is declining. Some long-term charts to look at. These are the monthly pivot points. And you see this little blip up here. I try to prepare the slides for this while the market is closed. Well, there's a few slides that I forgot to include, and I had to do it while the market was open. So that's why you're seeing some little marks over here. But we're just paying attention to the last bar that we have for February. These are the monthly pivot levels. If price is above that, then that is considered positive. If we drop below that, which is where we're at right now, that is considered negative. And then we have the calculated S1, S2 levels, as well as the R1 and R2 levels if we go higher and look at hit resistance. Down at the bottom, you can see that volume was slightly above average, but it did decline a little bit from January. This is also a longer term monthly chart with a 10 period moving average. Sometimes I use a 10, other times I use a 12 because there's 12 months in a year. Again, if you want to take a negative view on this, you can, but does this really look like it's falling apart right now? It means we're having some short-term trouble and we're down below this moving average so slightly, but does it really look like things are falling apart? No, it doesn't. Now, it doesn't mean that they won't fall apart from here, but right now it just means that longer term things continue to hold up. And we're seeing a lot of that in even the daily charts and the weekly charts as well. Yeah, we've been having some trouble and things might be getting ready to change, but we're not really seeing that reflected in the price action in the charts, at least yet. Then we also have a thing called the Bullish percent index. These are the number of buy or sell signals that are generated on point and figure charts that are inside the S&P 500. And what we saw was a real decrease throughout February in the number of buy signals. When we get down to this 30 range, that means we're extreme negative. And you can see back in January, we had an extreme positive reading. So the fact that this is bouncing around should not be surprising. There's also a moving average on here that kind of measures the overall trend. And as we've been going up, we've seen a little bit of a negative divergence with the number of new buy and sell or new buy signals that have been generated. And if you think about it, a lot of the real strength, especially in 2021, came from a small number of stocks, the big tech stocks. A lot of the other stocks, they weren't big enough to really push the indexes higher, but they didn't participate in a lot of the rally either. And so it's not surprising to see this to trail off. The market is currently going through a real change as it decides, does it want to focus on growth stocks that have a potential of really going higher, or more value stocks that pay dividends, that have a longer track record, that have areas in their products or in their services that are more friendly when we have a slower economy or a more inflationary economy. Then we also have the CCI, which used to be used for commodities, but I also use it for stocks. For most of 2020 and into 2021, we were showing an extreme positive reading. Well, with the monthly declines that we've been seeing, this is coming off an extreme positive reading as well. And that could suggest that there might be more downside movement on a longer term basis. Then we have a thing called the Chaikin Oscillator, which again, all of these are monthly charts. So we've been seeing a decline kind of halfway through 2021 that is still continuing. When this really turns negative is when we drop below zero. But as prices were going up into later 2021, we saw this oscillator continue to go down. And I constantly point out that because of how these oscillators are calculated, it can't help but do that. Because as we go up and up, there are higher and higher prices used in the calculation, which is going to produce a downward movement overall. We're not going back to these low prices for the calculation. We're going to higher prices that are closer to where we're at right now. So you kind of have to read that into what you're seeing. Then we also have a thing called the Chaikin money flow. It actually advanced slightly in February. And then we have a number of oscillators that I use, and I don't like to really use these on a weekly or even a monthly basis, but I still look at them and I'll still show them to you, where most of the oscillators are showing some weakness. As prices roll over, we're seeing a lot of these indicators. Some of them are still positive, but some of them are either crossing negative or are getting ready to cross negative. But again, some of that has to do with how they're calculated. Then we have the Mcclellan Oscillator. When it's below zero, that's negative. When it's above zero, that's positive. And this can act like an oscillator going above 80 or below, what do I have here, 60. Well, it has been declining, and it continued to decline throughout the month of February as prices decline. And this oscillator is just calculated based on price. We also have a thing called the Summation Index, which there's the top part is calculated based on price, and that's declining and showing that it's below zero. The bottom part is calculated based on volume, and that is also declining and below zero. And this, if we're in a more longer term decline, this has more room to fall before it's giving us some kind of an extreme reading. Then we have a thing called the STO, the short-term oscillator, developed by Carl Swinland. I switched this over to a monthly chart as well. And as prices continue to fall, well, we're not really seeing that follow through on the STO. These are the number of, okay, I made a mistake in this. This is the PMO. This looks a little bit like another indicator that he has. This is the price momentum oscillator. And even though we've been declining, it's showing a little bit of an advance, showing that those PMO signals on a monthly basis rose just a little bit in February. Those PMOs that are giving buy signals also increased in February, but those that are even above zero, which means giving a positive reading, that shows a decline right now. Then here's another PMO study, and I usually have these charts flipped. This just gives you a longer term view of the PMO, and it's positive, but could be rolling over. Based on price, we're showing a decline, and based on volume, we are also showing a decline. Then this is also based on Bollinger Bands. It's called the %B, and I use this as an overbought, oversold indicator. When we get really near the top, that means that we're really near the top part of the Bollinger Band. And when we get to that area or even above it, it's showing that we're pretty extreme. Well, right now, what we're seeing as prices decline, we're seeing this coming off of a signal that was generated back in 2021 of giving us an extreme positive reading. So this is also declining. So it's also suggesting that the longer term trend is still positive, but showing signs of weakness. Now, another one based on valuation, and I don't show this in any other videos, and I need to update this video that I do have posted. This black line is the S&P 500. This red line here is showing the price earnings ratio if we were at a PE ratio of 20. The blue is if we were at a PE ratio of 15, and the bottom is a PE ratio of 10. Historically, the average PE ratio since the 1870s is 16.7, somewhere around the 15 area. And if you look over here, this is the blue dotted line. So if we were to get back to historical norms, and in every day's video where I talk about the market is overvalued, this is one of the tools that I look at. Well, look at where price is. We're up around almost to 4,400. To get back to where it's been historically fairly valued, we would have to drop to 2630. Just to get back to being expensive, we would have to fall to about 3,500. And then down here at the bottom, for the market to be considered cheap on a valuation basis, we would have to decline down to 1,750. So this is why I keep saying, one of the reasons why I say that the market is overvalued. I look at this chart every day, but I don't always bring it up in the videos. And it usually I'll bring up a monthly chart or sometimes a weekly chart to kind of get more of a perspective on this. But this just shows that we're getting way expensive or overvalued right now. Then this is the STO that I thought I was talking about earlier. Here's the S&P on the top. It's showing a decline based on price and based on volume right now. Here is the RSI. I know a lot of you use that. I just use a standard default setting of 14, where it's coming off an extreme positive reading that we saw for most of 2021, and we're just coming down off of that. And what we need to watch for, does this mean we're going to see a reverse, or are we just working off an extreme positive reading right now? We also have a thing called the force index. It is still positive, but really showing a decline over the last few months. And this is pretty touchy. This can gyrate around quite a bit. So it can even go down here really fast if we have another negative month. Then there's the Stoke Rsi, which it's really touchy. Just with the 2 months that we've had in our downward movement, it's already showing an extreme negative reading. And it can stay there for a long time, just like it can stay positive for a long time. Another oscillator is the Williams percentar, which is coming off. It was pretty much positive for all of 2021, going back into about April of 2020. So this can give us a real extreme reading for long periods of time, but lately it has been declining. Different trading systems. This is the Elder system. It's more short term. When we have green bars, that's positive. When we have red bars, that's negative. When we have blue bars, that's more neutral. And then there is a moving average plotted here. It's a really long moving average. This would be 65 months, which is a long time going here. But overall, it's showing that we are more neutral as far as this chart is concerned. And then we have a thing called the parabolic stop and reversal. When the dots are below the bars, that's positive. When the dots are above, that's negative. Well, because we had a down January and then a down February, the last 2 months have been negative with the dots on top. Some different charts that I look at, and these are going to look a lot different for those of you that watch the daily videos. This is a Kegi chart. This comes from Japanese candlesticks. And I also have a Renko chart that I show you. When we have a red line, even if it's going down a little bit, that is positive. Excuse me, a black line, even if it's going down, that is positive. The red line is more negative. Well, even with the decline that we've been seeing so far in 2022, it is still black, even though it has been declining. Then here is, it's called a 3-line break. And because we had the down month in February, that is showing what potentially could be negative. And I thought I had a Renko on here, but we'll see if that happens. This is called equivolume, where if we have an up month, that's a green candle. If we have a down month, that is a red candle. And it's showing that we are currently declining. Okay, this chart didn't turn out all that well. Let me try to get it bigger. This is a monthly point and figure chart, and I'm going to scroll back up here to the top, where it's still looking pretty positive. It picked up some of the decline that we saw in the earlier part of the year, but it lately for the month picked up 3 green boxes, which is more positive. Up here at the top, it says no recent chart pattern found. So we really can't read much into this right now. On the daily and weekly chart, what happens, and I'm trying to go down quickly here, is a line will be drawn, a trend line, You can see here's a red trend line here. Well, I'm not seeing one. No, there's really no line here. These are better on a daily chart and sometimes on a weekly chart. I don't use them all that much monthly for monthly charts. Let's look at some other markets. This is the Dow, where we're kind of could be putting in some kind of a topping pattern with the Dow. We've dropped below the 12-period moving average, so that's slightly negative, but this moving average hasn't rolled over, at least yet. Look at the mid caps, kind of the same thing. We're below the moving average, but the moving average continues to advance. Here is small caps, and we're getting a little bit for the next day here, where we close below the longer term 12-period moving average, but the moving average hasn't really rolled over, at least yet. NASDAQ, it's been seeing a lot more weakness, where we closed below the moving average. And in order for things to turn back more positive, we'll need to go back and recapture that. Or the longer we stay below this moving average, the more this will be likely to roll over. The NASDAQ 100, we closed below the moving average as well, but the moving average continues to advance. NYSE, kind of the same thing. It's been showing more of a congestion price movement for a lot of 2021, but we did close below the moving average in February. This is the Wilshire. I just use a line chart on here where we did close slightly below the moving average based on that. So yes, longer term, we are seeing some weakness, but these moving average lines haven't rolled over significantly, at least yet. Then these are all stocks. This is taking world stocks and some US stocks and cramming them all together. Kind of the same story. We closed below the moving average for February. Some other broad markets that we look at, here's the Crb Index, a monthly chart. I use this a lot to look at inflation. And since we had the lows in 2020 after the COVID plunge, the Crb Index, which can be used to look at inflation, has really been advancing. And this looks strong on the daily chart, the weekly chart, and also on the monthly chart. Gold, a lot of people really like gold, but they keep waiting to see, is it going to break out? Is it going to get back to the highs that we set back in 2011 and got close to back in 2012? Well, we're kind of getting close to that. In a high inflationary environment, people like to look at gold as a potential thing to own. But right now, as I record this, we're seeing the dollar advance and gold advance kind of at the same time. That will probably not last for very long, but that's what's happening right now, as we have a lot of uncertain geopolitical things going on between Russia and Ukraine. Oil spiking back up. And just because I know this and I'm recording this a little bit later, we closed at 95 for the end of February. Well, into March, we are actually above 100 now. So we're seeing a real spike up, where we had saw things just go down in the toilet back in the good old days of 2020, when oil was very, very cheap. But there's a lot going on. We have a new administration now that pretty much they're trying to do away with fossil fuels, and so they're stopping a lot of things that the previous administration tried to support to make the US more oil and energy independent. Well, the new administration has wiped all that out, and we're finding ourselves at a point where we really need oil a lot right now, and so that's really spiking things up. And we're buying oil from Russia right now, even though we don't like them at the current time, and never really have liked them as far as the US is concerned, because there's a battle going on between Russia and Ukraine. So this is really, and for a lot of you, this is where you're seeing personal inflation. Probably food prices are going up, but every time you go to fill up your car and you see gas prices going up and up and up, yep, that's what's happening right now. Silver, it's not breaking out as much as gold, but it's right at this moving average right now, and it's pretty much been moving sideways for the last couple of years. US dollar, This is a monthly chart, which still looks to be holding up overall. And that's kind of the interesting thing. Usually the dollar and gold go in opposite directions. Right now, they're both going in the same direction, but that could change at any time. But we are seeing an overall uptrend currently in the US dollar. As far as bonds, these are bond prices. This is BND. This is an ETF of the bond where they've been having a lot of trouble throughout 2019 and before the whole COVID plunge. And even after the COVID plunge, bonds were doing quite well based on price, but lately have really been starting to decline as interest rates go up. Because as bond prices go down, interest rates go up. And then this just shows you the different yields, longer term, going all the way back to 1980. This black line is the 30, then the 10, then the 5, then the 2, and then the 3-month. And this just shows how interest rates have been increasing so far for 2022. This is looking at things internationally, and this is kind of strange. This dotted blue line here, this is Germany. They had actually been negative since 2019, only to go positive. Well, as I record this, they just dropped back down to negative again. So, and I don't have the labels on here that I have on the other chart. The top one is the US, then the 1.41, that's the UK. The red line is Japan. The dotted line is the German Bund. And these are all the 10-year yields. Then another thing we're watching is the 10-year minus the 2-year credit spread. As we decline, this shows a tightening monetary policy. Well, interest rates haven't been raised yet. And QE is, they're talking about rolling it back, but it's still kind of in force as I record this. This also could signal that the economy might be weakening, especially if we get down to this red line and we go negative, because that might mean that we're getting close to a recession. You can see when this really declined before 2008 into 2009, 2006 into 2007. That's when we had the whole financial meltdown. And you see how it preceded price? First, it dropped below, and then we saw prices follow. Well, right here, we saw it dip slightly back in 2019, and then right after that, we had the COVID plunge and a pretty short recession after that. Well, if this continues to go down, are we going to see prices follow after that? Stay tuned. So thank you very much. I know this wasn't as organized as some of my other videos, but please, lots of feedback. If you want me to, and I'll be changing things, but I won't be preparing another one of these videos until the end of March now. So thank you very much for watching this. And if you only watch this video, I will talk to you at the beginning of April. Please check out some of my weekly videos that I post, and I really put a lot of effort into my daily videos, and I hope you might find those useful as well.